Welcome to another edition of the Macro Market Update. Here we discuss a longer-term portfolio that is based upon leading economic data and not on opinions or narratives, as tends to be the case in the commercial financial media. Speaking of which, we had Bloomberg coming out a month ago with a story about the end of an era for the US dollar. Now, the US dollar has been up for 6 of the last 8 weeks. As you know, we're building quite a defensive portfolio for a while, as I am not particularly positive about the future. It has been a month of slowing growth and slowing inflation. The rapid increase in interest rates and the associated strength of the US dollar has been pushing US equities down. We also had some very interesting news from the Eurozone that showed that industrial production came in at minus 1.2% year over year, which was better than expectations of minus 4.2% year over year. This represented the first sequential acceleration in quite some time. Additionally, UK inflation of plus 6.8% year over year was in line with expectations, but better than the previous period of plus 7.9%. And marks the fourth sequential deacceleration. Even with the fact we are seeing some short-term positivity, the market seems to be looking further ahead. This is clearly shown with the German index being the DAX taking a serious hit to the downside. This is significant as the German economy continues to be the engine of the whole Eurozone. So, if we are negative about the US and the EU, where should we invest? And that is exactly the great thing about our portfolio. We look at global macro exposure, meaning we don't have to stay in economies that aren't performing well. I've been very positive about Japan, and if you've missed being long Japan into their economic acceleration, this is your chance. We just had a small, healthy correction while they are releasing positive economic data. Also, if you have missed being long oil and energy stocks, this is also the time to get in. With inflation set to re-accelerate, these will be great. The energy sector, being the XLE, is up 8% in the last month versus the tech sector XLK, which is down minus 3%. I don't hear anyone on CNBC talking about that after they got everybody to buy the tech and AI bubble. On the other side, we have gold going down, which shouldn't be a surprise. When you have the dollar going up together with rates, this tends to happen. For that reason, it is a good idea to sell some of your gold exposure, while it does remain bullish trend. Let's get into the portfolio and the charts and discuss our positioning in more detail. In order to truly get a good grasp upon the performance of a portfolio, you always need to compare it to the benchmark, which is the S&P 500. We have the weekly chart in front of us right now, and as you can see, we had 3 very negative weeks. This is also to be seen in the Nasdaq, which obviously holds all the tech stocks and these AI bubble stocks. Another thing we always look at is the VIX. The VIX is the volatility index, and as you can see, I'll zoom into the daily chart real quick. As you can see, we are going up and staying stubbornly high. This chart is inversely correlated with the S&P 500. Every time the VIX goes this high, stocks truly sell off. As you can see, this was the housing market crash in 2008, and this was when COVID really did its thing. So if we're going up a little bit higher, this shows we will be going a little bit or a lot lower in the stocks. So for that reason, I always love the US dollar. As you can see, we just had a correction, but that is completely normal because we just had a very long bullish run. This remains the biggest position I hold in my portfolio because, as you know, when people sell a US stock, doesn't matter which one, they instantly buy US dollars. On the other side, we have gold. As discussed, we have a slight correction, but it's still really very bullish, so it's not really a problem. We also still have the defensive long being defense itself, and the discussed Japan stocks being the Nikkei. We just had a very long impulse up, and now we're getting a very slow correction down, so feel free to really push this long, as this truly is the moment to get in here. South Korea has corrected but still in bullish structure, as India very bullish still yet indeed. We are replacing 3 sectors in our portfolio. The first one is gold miners. With the dip in gold miners have been going down quite strongly, so I will be taking these off the table along with staples and utilities. We will be replacing this with, as we have discussed, the WTI oil, so just oil in general. The ticker is for West Texas oil, so this is what we will be along. With inflation set to reaccelerate, this will truly take off. As you can see, we made a higher high, we came down all the way, we are making a bottoming out formation, so I'm really seeing a very bullish future for this stock. Also, a very defensive sector being healthcare is great, and the with oil correlated sector XLE, which are the energy stocks, is really set to go into higher highs. So that is a full portfolio. I hope you found that interesting. Stay updated, and as always, best of luck in the markets.